right, good evening everyone. This is Wednesday, November 13th. I call this regular meeting of the Brookfield Board of Finance to order. If you would rise and join me for the pledge. Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, as we know at this table, and who's ever at home, and those of you in the audience, thank you for coming. We had an election a couple days ago, and we do welcome at this meeting Brianna Ruocco, who fills in a 2-year spot. So welcome. Yes. And then next meeting, we will be saying welcome back to Mark Mulvaney, who got elected on a 4-year spot. And tonight we will be saying bye to Ricky a little later on. Okay? So that's that for the first part. Brianna, as a new member, there is nothing that precludes you from being included in any of the business that we go over tonight. Any of the votes that we do, you're a full participating member as of when you got sworn in. So anything, even approval of minutes, unless you want to, there's no abstention needed. Okay. Now we move on to public comment. Do we have any members of the public here tonight that would like to give comment? Please join us at the podium, 3 minutes per, and state your name and address, please.
Betsy McIlvain, 127 Long Meadow Hill. I am here as chairman of the library board. You will notice on your agenda that we made a special request to the Board of Selectmen for a special appropriation. It was denied at last night's meeting, so you will not be discussing it. I just wanted to give you a little heads up on why we thought it was important, why we thought it should have come to you, even though we know you won't be doing anything about it. You will recall that in the 2018-2019 fiscal year, you, the Board of Selectmen, and the town approved a part-time position for the library, one of 3 that we said we were requesting over a period of 3. Well, we wanted them all in 1 year. It looked like they were going to come one each year for 3 years. We did not hire that was approved. We did not hire that person. It was a fairly hard year for the library with finances. And so we didn't get around to hiring anybody. And when we put the budget proposal together for the current fiscal year, we actually succeeded in leaving that position out of our budget request. It was a problem that we attribute to half the director, half the board not paying much attention to the budget salaries that year, and that's the sole reason it was gone. And we came in defending a budget which we thought was total, and I do still remember Mr. Rooney saying, if I were you, I would have hired that person the 1st of July. Smart move. We did hire the person in April of this current year. We also had approved in this current budget one additional part-time employee, which we have also hired. So we are short the amount of salary, $26,200 plus Social Security of about $2,000, and which the Board of Selectmen did not approve, so you will not be worrying about tonight. Unfortunately, ask us to see if we could manage our budget to cover that, and if need be, come back sometime after the 1st of the year and redo the request. It's disappointing to the board. Marcia's been good enough, although I said I don't think the board is ever going to do this again. But actually, Marcia has some very concrete plans on how we could actually have avoided it and will in the future. So I'm, again, sorry we are not here asking for the help, but I thank you.
Thank you. Are there any other members of the public here tonight that would like to give comment? Okay, seeing and hearing none, we'll move on to the next item of business.
We received no communication or correspondence this month. So the next item is the approval of the October 9th regular meeting minutes. I'd make a motion to approve them as presented in your folder.
A second? Okay, any discussion on the minutes as they were distributed and are in our packet tonight? Did you want a chance to look them over, or? Oh, okay. All right. Hearing no discussion, all those in favor of approving the minutes as distributed and presented tonight the same, indicate by saying aye.
Aye.
Aye. Okay, motion carries 6-0.
We should have one abstain.
Oh.
Brianna
Yep.
wasn't at that.
She's a full member. She doesn't have to be at the meeting to conduct business and approve the minutes.
Yep.
We went over that in previous times.
Sure.
Mm-hmm.
Okay.
Okay. Now we move on to the next order of business, the report of the first selectman. Sir.
Yeah, we went out to RFP for bond counsel and financial advisor. The town hadn't done that in many, many years. Our current policy is to do this every 4 to 5 years. So we've done it with a lot of services, and this summer, late summer, we started with bond counsel and financial advisor. We got a number of proposals back. We hired a new bond counsel and a new financial advisor. Both of them extremely well thought of. Particularly the financial advisor, I called 7 different first selectmen, and they all used one word: excellent. I've never gotten that kind of response. Bond counsel also got very, very good comments. So we used them to do our rolling over our bands. They did an excellent job. We got an interest rate of 1.29%, which is a very good interest rate. And what I'd like to do, since you guys haven't met them, I'd like to invite them to come make a presentation. Probably financial advisor, bond counsel does the legal, but I'd like to, if you'd like them to come in December or January and make a presentation to introduce themselves to you, give you an overview of how they see the markets and things like that. I think it would be a good idea. And I can arrange that through whoever is the chairman of the Board of Finance.
Was everyone planning on being at the December meeting?
Okay, so we'll try for December? Okay, I'll try for December. Good. We're also, our financial advisor suggested that we refund and refinance our current borrowing, and we're going to plan on doing that. And they said with the current interest rates that we have, we could save between $175,000 and $200,000 in debt. We're not going to change.
Over the life, or
I'm sorry.
that's over the life of the debt?
Over the life of the debt.
That's the net present value, though.
Net present value, but we are not going to extend the tenor. We're going to keep them exactly the same. We're going to pay them off. We'll just pay less money. Pay them off in the same time periods. Just save $175,000 to $200,000.
What's their fee going to be on that?
I'm sorry.
What's their fee going to be on that?
Somewhere between, I would say, $20,000 and $25,000.
And the savings is after their fee
It's after
and
their
the
fees?
present
Yeah.
value.
Okay, thank you.
FEMA, we got notice that FEMA has approved and forwarded the claim for debris to the state. So that's set, and that was our single largest item, $1,200,000. Our total claim payable from FEMA is $1,510,000. We're still waiting just one item, and it's the final item. It's management expenses. We estimate that's going to be approved at somewhere between $94,000 and $96,000. So we think we will end up, when we're fully accounted for, we'll have approximately $125,000 in revenue over expenses. So that's good. That's changed. We did have, I noticed, as Marcia had said at our last meeting, we had an outstanding purchase order for the FEMA that we closed out, and that's where we got the difference. But having said that, It doesn't account for wear and tear on trucks, all the comp time we had to give people, the things that we did that are not actually chargeable, our voluntary firemen, the wear and tear on their trucks. So I think we came out at least even or a little better than even, given all the expenses that are not in our budget. IT security, we're upgrading our security. We've been doing it over the last few months. We're moving next month to multi-factor authentication. So if you want to reset your password, you're going to have to get an email or a text and get a code and go back in and re-sign in. With all of the things we've seen with the hacking going on, we continue to build up our security for our IT systems. We went out to bid for fuel last week, and we're going to save about $13,000 over last year. Our bids came in about $13,000 below. So
When does
that's
that start? When does the new pricing start?
I think it starts January 1st. Is that right? I'm not sure. On capital budgets, as you know, we're having each of our departments put together their capital budgets so that the boards can look at them in December. They will have them to Marcia and I the Friday before Thanksgiving. We're going to review them, go over them. We're going to discuss them at the Board of Select meeting on December 2nd, and we'll get the initial package to you guys as is, right? With no first selectman or Board of Selectmen cuts, so we can just have those conversations. And then what I was thinking you guys might want to do is that for large capital items or things you're not sure about, have those departments come in December and January, so we're not cramming them all in February. Up to you, you can do what you want, but I think if we spread that out a little bit more, a little more thought, a little more time goes into it, and then prioritize the projects, and then as we go through the operating budget, then we make those decisions at the end of the budgeting season. They're also updating the 10-year capital plan. They're adding a year to it, so that should be good.
Are we going to revise that entire presentation, the 10-year capital plan? There's a lot of stuff in there. That's all going to be
Taken out.
revised or however.
I'm trying to figure out the best way to do it, so if there are changes, significant changes, you could see what that was last year and what it is this year. I'm not exactly sure how that is going to,
Yeah, we're still looking
trying
at
to
that.
develop it in my head.
It was a big document.
It was
Big
a very
document,
big
yeah.
document. It was. We've got the document's going to be smaller this year.
I remembered I was
Oh.
putting together the welcome package
Yeah.
for Brianna, and I forgot how long that
Each-
presentation is for the capital
Yeah.
plan.
So each of the capital projects is all the same questions that were on 6 pages last year on 1 page this year.
Yeah. So
Smaller
saving
font.
paper, same information. We're just
Smaller font.
smaller fonts, same information, and so we hope to have that for you in December, early December, so you guys can start looking at it. And that's our report.
Wonderful. Move on to the report of the finance director, Marcia.
All right, we, on revenue, I gave you revenue, I want to talk a few things about it, that property taxes is our biggest revenue. Supplemental taxes, we estimated at 600,000, but we don't know what the supplemental taxes are going to be. But mid-December we'll know, because that's for cars that were purchased during the year. And the way that's calculated is the assessor gets a listing from the state in early December of what cars were added. So that's still a big if on property taxes. Prior year taxes, that Roberta, the tax collector, was a little worried about that. We budgeted $425 and she's collected $208,000 so far. And I just asked her about any big tax sales, and there is a potential tax sale that she'll have in the spring that she says that, well, but it won't be revenue maybe until next year, because there's 6 months that you have to hold that and they have the owner has the option of buying it back. But either way, we got our money, so I don't know. I'll have to look up the legalities of that, but I would think it's revenue, that if we're going to get it from somebody. And then this is the most boring graph you've ever seen. And we want it to be boring. That tax collections are a big fraud risk. That because there's not a lot of segregation of duties, tax collector collects the money, sends out the bills, has custody, has record keeping, and authorization. And so we're doing a few things on that. One is monitoring it to make sure that it stays the most boring graph you've ever seen. And it's what this is representing is the percent collected. In July, we collect about 50%. In August, it goes up to about 55%. Not much happens. In November and December, people trying to get tax deductions, it goes up a little bit, and then the second payment comes in. So we want it to be boring, but we should be watching it because it is part of our internal controls. The other part of our internal controls is posting and balancing on a timely basis. And for the first time in October, we had to go downstairs and say, hey, we don't have the 31st yet. Could we get that? Because we're trying to finish this off. So that is great. That's our new payroll clerk that also is doing revenue. And she is right on this very, very quickly. So there are no surprises in property.
All the internal controls that you were planning on putting in place for cash management and segregation of duties and everything, those are in and working?
We still have more that we want to put in. And one of that's here is she's developing a list for refunds, that those will go to the selectmen's meeting for them to approve it every month. So we're working on that. The last one, and we've talked to her about it, and just if we've balanced everything out on the Grand Rate Book balance report, the only place there may be an issue is in ending balances. And so we've talked about alternating who sends out the tax bills, because to be honest, I've worked on 6 or 7, I don't think there's any issues here, but I've worked on 6 or 7 tax collector embezzlements, and they always do it the same way. There'll be one taxpayer that's paid that doesn't show it. Well, they send out bills every month, but let's say you're the tax collector and I'm the assistant. If I've stolen some money and am covering it with other payments, I'm not going to send that taxpayer a bill, but you don't know that, so you're going to send them a bill. So if we alternate the bills every month, it's just a cheap and easy way. But so we don't have all of them. We've got a lot of revenue streams, and we're still working through revenue streams for controls. But we have a lot more access to a lot more things than we did a year ago. Intergovernmental revenues that I think I misspoke last month and said town aid road money came in. I thought it did, but it did not. It's waiting for the Connecticut bonding is what's delaying it. That a big fight in Hartford. But there's no changes in amounts from what we've thought in the past. There's veterans and disability. We did get the final numbers from the state. That these were estimates, and I think one is $200 higher than we thought, and one is $200 lower than we thought. But they've been audited at the state, and so we're just waiting for a check now. There's other revenues on the report. We're still, we've changed, Munis reprogrammed it so that they're in similar categories as on the budget. And fire marshal, that's been a change because we've got 2 fire marshal revenue accounts now, and we have 1 cash register button. So we might be doing that through finance and making those changes. But there's nothing, I think we're in good shape on all the revenues. We'll talk about some more revenues when we get to the next slide. Any questions for me on revenues or on the expenditures?
Any risk in the licenses and permits that you see?
So licenses and permits so far, and I haven't had a chance to go through and see where we stand against each of the big ones that we had talked about. So we haven't had a conversation on that, but what we've done is been reconciling with them on that. So I have quantitative answers, but not qualitative answers.
A lot of these are pretty close to where we want them, but some aren't. But we do expect a good jump in fire marshal inspection fees in the spring because of some of the massive building that's going on, and that's going to start, so that'll creep up. We'll keep an eye on it.
And the exciting one is on page 2, investment income.
Yeah, we're looking at
We
that.
budgeted 120 for the year, and we're at 209 for the year.
What are you investing in?
Repo,
What?
just an overnight repo.
Wow. No,
Short-term rates through the roof.
Um,
But a lot of it has to do with the fact that Marcia worked to restructure, I don't mean to jump here, but to restructure the bank accounts at Union Savings Bank. So we really weren't efficiently earning interest on all of our eligible balances. So Marcia worked very hard to restructure, and we are now, so.
So we're a few things on that we want to take a look at. We've got good, and what the three of us had talked about when we did this bonding is we've always just bonded short-term debt in November for the year, but we may have enough fund balance now to loan it to ourselves. And what if we were to take a year off on short-term debt and pay for it out of our own cash? We would have less interest income, but we would, save $70,000, $80,000 of interest for that year. But that decision is not just all on itself. One, we have to make sure we have the cash flow, but two, we have to consider that in with the cash flow for the new school. Because if we could maybe use this cash flow and push that one off. It wouldn't be as visible that we're saving money, but so the OPM I think has come to the first meeting now, and we're waiting for a separate meeting with finance so we can talk cash flows and figure that out.
Do you expect this pace to continue for the rest of the fiscal year?
The bank had estimated, given us an estimate that if our balances were the same as they were last year, which I don't see why we wouldn't be, because we have a balanced budget, that we would be on target for $560,000 of revenue,
So,
interest income. So,
a little favorable variance.
yeah.
Big
And part of
there.
that is we've increased our general fund balance significantly over the last 4 years by about $5 million just in the unassigned general fund balance, and that brings up our total balances, so that's a big part of it.
We are opening a new bank account with Newtown Savings. Just right now, we've got all our eggs in one basket, all our money in one bank. What if there was an issue a cybersecurity issue is our biggest concern. Right now, our return that we're getting on the overnight is 2%. And it won't be much more at Newtown Savings Bank. The difference is that we'll just have one account. We'll have, but it'll be a separate bank. It will, they adjust their savings every Tuesday and there's no fees, every Tuesday to equal the State Treasurer's Investment Fund, the STIF fund, which usually has pretty good rates. But they'll divide this up with $250,000 certificates of deposit, so it'll be 100% FDIC insured. So right now it's all the same rates for both banks, and our overnight is insured as well.
Because as you know, no individual account can have more than $250,000 of FDIC insurance. So there is a program from a company called Promontory that allows Newtown to distribute out funds to other banks overnight and make those deposits of $250,000. So if we had $1 million with them, they would actually move $750 out to 3 different banks and then bring it back in. So we're 100% guaranteed that the funds are FDIC insured.
Yeah, we consciously
Yeah,
under budget, obviously, for that investment income,
You know,
just in case.
but not this much.
Well,
Well-
could you have predicted?
No, but
Yeah.
so
Right.
so as we move forward to the budgeting season, Can we have a break, it'd be good to, John or Marcia, to get a breakdown of the source of this, so can we predict it for next year? And what should we still be conservative, but assume to factor in?
Yeah. Well, we did double the budget from last year, and we were a little scared doing that. And to be honest, that when we started making the big interest started in like January, so we.
Yep.
Something to keep an eye on.
Yes, thank you.
Thank you.
So I think that that is good stuff, and
I know we asked this about pretty much every month. Why the pensions? Why is it negative?
because the Board of Ed paid us their portion of the pension.
Okay,
and
so
we
it's
have-
gonna. still-
Correct. We want to pay it in this month, or by December 31st, we want to pay our portion. And so that, yes, that,
Page 5.
and so just going through these, that, the wages, that the elected officials are all at 3.77% because they don't have the 0.4 accrual. The other ones are 3.53%, is 8 out of 26.4 pay periods. That the ones that are a little bit higher than that are because of perfect attendance, bonuses, that the library, we've talked to Yvonne about two things. One is in Munis, what the Board of Education does is position control. They have 200, I don't know how many teachers in one line item, and the way they keep track of that is position control. That it's kind of like little slots in Munis, and instead of saying teacher by teacher, they look at slot by slot. That, kindergarten teacher 1, kindergarten teacher 2, 3, 4, 5, and so we're going to, and a lot of our departments, we've got one first selectman, we've got 2 people in the non-union finance department, but what we'll do is we'll do position control in the library so that we know how many slots. When you add a slot, we can say, okay, we approve it, we put it right in Munis. And full-time is not as tricky as the part-time because, oh my God, trying to figure out who's who over there. That, well, this one is 2 hours, it's the circulation desk, and this one is 4 hours at the reference desk. And then they start flipping around, and so that'll be very helpful for that. And the second thing, Yvonne and I are going to meet with respect to their part-time people, that just to make sure that we keep them on track and we know how many hours that she's got, and that might just mean in their timesheet that we make some adjustments so that she can see it, she can manage it a little easier than the way it's managed now.
Has the time clock system that you implemented earlier been helping departments with those?
We have gone out to bid for that. We had quoted it on Munis, and Munis was so expensive that we went out to bid, and we've had one set of interviews. We have an interview on Thursday, an interview on Friday. We're trying to also fit in, right now, the police on their scheduling. It's outside of Munis, or outside of anything we have access to. So we're trying to, even if we don't buy it now, the police came to the first interview so that they could ask about scheduling, because they've got a lot of unusual needs. And right now they're using 2 different computer systems and a manual paper system, all pieced together. And I think if Peter left, who knows who could figure that out again. But so we're trying to pull that in as well. So we have not started that. We had thought we would institute that January 1st, but as we go through this, my guess, and I don't think anyone's publicly, in the committee has said we're not going to hit January 1st, but I'll bet March 1st might be a more realistic
Okay.
thing. Any other questions on revenue or?
I'm going to ask a stupid question. Probably have the answer. what is the column state estimate, town estimate?
So the state estimates, the state tells us how much they're gonna give us, and those are the numbers that are in green. That,
So we budgeted for 870, the state's telling us they're giving us $1.5 million.
so the budget was what the state told us they were going to give us at that time. So we budgeted on April 4th or something.
Right.
And we used the state budget as of April 4th. They didn't pass their budget until the end of June.
I agree, so what I'm trying to get is we're getting 180,000 extra dollars.
That is correct.
We knew that.
That's correct.
We knew that shortly after.
Right, but that's not factored into the education shortfalls, is it? I mean, we give that money directly to education. So why isn't that factored into the shortfalls of the education that we're reading on these?
We
Like-
would still have to do an additional appropriation to give it to them.
But it's the money that was due to education. We can't keep that money, can we, as a town? We can't say we budgeted 800,000 to education, the state gave us 1.2, we keep 400,000. That money has to go
It has to go to
to
the
education department.
If the Board of Ed's budget was only $870,000, then we would say we can't keep that money because we're not spending that, but we spend $40 million. So, and this is just part of funding it,
I get that, but what I'm saying is, where does that money go? At the end of the day, we get that $1,052,000 into our account. That money has to go to the Board of Ed, correct?
no.
I'm asking, I'm not yelling, I'm
Here's
asking.
how it works. We have to fund the Board of Ed. We've agreed exactly how much we're going to fund them. How we do that funding
Okay.
is up to the town. But my opinion is, I agree with you 100%, any overage in the ECF should go to the schools.
The state doesn't mandate that?
That's what I'm worried about, the
The
state mandating
We would
that.
lower the amount we gave the schools of our money and increase it to $1,052,000
The state
from
doesn't.
ECS.
The state doesn't mandate that, no.
Yep.
Okay.
The state mandates that if they had a flat budget, and we said with the MBR they mandate it. So if they had a flat budget and there was a 0% increase, and we had this increase, we would have to increase them because we got an increase in education cost sharing.
Okay.
But
So then, so I understand, I apologize. We give the Board of Ed $43 million, whatever the number is. That's the number the town gives them. So this revenue is town revenue, so as long as we give them their $43 million, that's our money.
Correct.
The town's money.
Yes.
And if everything comes in right on budget, we're gonna have more fund balance, $180,000 more fund balance than we had anticipated because of that.
But you have to think of it, this was meant for education. So if there is an issue or concern where the Board of Ed is asking for more money, this is a place we could get it without touching the town's general fund.
I think you guys are saying the same thing.
Yeah. Thank you.
Any other questions on revenue or expenditures?
Anything on expenditures? There's quite a few more pages than the revenue.
And you had that one last night, that,
Any
so.
flags, anything
Yeah, it's still early in the
bubbling
year.
over?
So right now that we're meeting with the departments next month to just go through where they stand. We've got some budget adjustment forms that have come in just internally where they want to move it from one line to the other. But we don't have anything significant that is a surprise or that we don't think we could handle on our own.
Any other professional service RFPs out there?
Yeah, we're going to be issuing one for town attorney.
We haven't yet, though.
We haven't yet, though.
You're correct. With respect to the capital projects that we sold the notes, that if you want the official statement, there's a link there, which of course I don't give you this, so you don't have the link. I'll email it to you. That we earned a premium of $50,575 And it's going to go into the general fund. We don't normally budget for premiums. It's going to go into the general fund because the cost of issuance, if you remember last year, we changed things around and we divided it up. So if it's notes, if it's 1 year or the annual costs of debt, that it's in the general fund. And if we're doing bonds over multiple years, we put it in the bond fund. So the $50,000 premium will go into the general fund to cover the cost of issuance that which is in the general fund budget. That the Board of Selectmen also closed, it's a housekeeping move and recommended by the new bond council, that we had a lot of old debt that was out there authorized but unissued, that a lot of it was 2,000 here, 1,000 here, because we were issuing in $5,000 increments and we weren't approving in $5,000 increments. There's an old WPCA thing for a project that I hadn't even heard of, Delmar. So all that's been closed out. So the only authorized but unissued debt that we have, other than the current project, Four Corners Phase 3, Phase 4, and these notes we just issued, Phase 1 of Four Corners, we just wanted to close it all at the same time, and there's some issue with an island that needs addressing from Phase 1.
The crosswalk at Brookfield Craft Center has caused about 15 accidents since it was put in, including $5,000 damage to one of our police cars.
That's a surprise to who?
The state
People can't slow down and pay
DOT
attention, though.
really wanted us to put that island in, and it has caused more trouble and more problems for people. So we're going to be taking it out. We still have about $100,000 left in the Phase 1 budget, and we estimate it's somewhere $25,000. And the state today agreed to let us take the island out. So we're going to go out to bid for that.
Are they providing any funds to re-engineer that?
No,
Just smash it.
It's silly.
I think that goes under the ground by a little bit.
We would love them to do that.
Save that granite.
I know.
The island,
For the next phase?
Yeah.
no kidding aside, the island was put in for a safety reason, because
Yeah.
then people could cross halfway across the street, wait, press the button, and cross the other half. Anecdotally, in talking to people from the craft center and our police and everyone else, no one presses those buttons to turn the lights on. No one. Have you ever seen them on? There they are. They're broken right now because somebody hit them. But I've never seen it. We're still going to keep the RFFDs, the blinkers, but we're just going to take that island out. And we hope it will be safer.
Audit update, that the auditing, I have my department now doing timesheets and including myself, so we know where our time is going and analyze when it's best to ask for another person, if we ask for another person. I know that the bonding has taken 60 of my hours, that just getting that official statement out, but now that we're going back to the audit and capital budgets are the priority. The OPEB report has been received. We've given actuaries everything we needed for the town pension and the firefighter pension, so we're waiting for the reports to come back. Long-term debt, I've had the intern do that in capital. The long-term debt, the bonds are all set. It's the compensated absences. I had the intern work on a schedule for me, and I haven't reviewed it yet. Capital assets, the same thing. Capital assets, what we're doing is trying to line up all our capital assets so that what the assessor has is what the insurance company has, is what we have. And we've got land and buildings done. We've got vehicles done. We don't have equipment done. And what we might do is say, nobody really cares about our capital assets. We don't take mortgages out on them. I'd rather not, if we're make changes to it on the financial statements, it's going to be a prior period adjustment. I'd rather wait till equipment is done so we don't have two prior period adjustments year over year. But at least we'll have good schedules. The FEMA receivable is waiting Connecticut, as Steve said, and Dan had asked me for a schedule that kind of gave the matrix that totaled it up year over year and total costs. So this is it at the bottom. That the expenditures, we only picked up revenue to meet the expenditures, so that there's no net revenue in year 18 or year 19. Any net revenue that comes in will come in the current year that we're in. The total that we'll get from FEMA is $1,504,000. There in that is only one estimate left. The best estimate now that we have is $94,000. The costs against that are $1,376,000. If you remember, there were two additional appropriations, $200,000 and $1.5 million, to total $1.7. But we didn't have to spend the full $1.7. We only spent $1,376,000. That's it looks like a net revenue, but it's only because not everything was posted to that FEMA line as expenditures. Some did not require an outflow of cash, like the use of equipment, and some we were able to get some salary reimbursements, and we didn't reallocate the salaries from where they are in the budget to the FEMA expense line.
So where in this, maybe I'm wrong too, didn't we collect insurance money?
This is after the insurance money that we collected. And
So there is more cost though than this is. This
there is
doesn't-
more costs, yes.
But this is what we were talking about, I think. We wanted to see the whole picture. We wanted to see all the costs, the insurance revenues versus everything, because because I thought insurance was another $900,000.
Yep,
That's
so
just
that's
about
the
right.
schedule I gave you.
Yeah, so that's, in order to keep track of exactly the storm, the insurance, the costs, see what we're seeing. I appreciate what you did. I'm not, but this is just FEMA cost against FEMA revenue, basically, but we have insurance costs of 900,000 or 880.
Yeah,
So-
we had damages of 900,000 and we got paid 900,000, so that's a wash.
So I
Okay.
gave you that last month, but I have it with me again.
Okay.
And if Colette is nice enough to put her code in the copy machine, that maybe I
No,
can-
we're good. I'm good. If you got it, I just wanted to see the big
I
picture
would like
of
to
the
see
whole
the,
thing.
yeah, all together, and but
That's
I mean,
all.
you can do the math.
This,
With
you saw, we
with
gave this out
final,
last month?
So you want it with this?
That's
with
fine.
final
I think
numbers?
it'd be good
All
to.
right. Is there any updates that need to be made to the spreadsheet you handed us last
So
month?
I made
with
one
updates?
update from last month.
All
I
right.
made 3 notations. One update that we thought, last month we thought that this final category was 100,000, and our best estimate now is 94,000, so it went down by 6.
That's on
And
management.
there are 2 approvals that we've received, and I just wrote in red, approved, and it was approved for the exact amount that we had estimated. So I just wrote that on the 2. So
Can you send that out then in anticipation for the December meeting? The financials are not going to be concluded before December 9th, are they?
You
Or
should
will
have
it?
draft financials for your.
We can
Sure,
send it
but
out tomorrow.
they're not going to be concluded, transmitted.
Correct.
before
No, we
December
want you to
9th.
see them
Right, yeah,
before
all
they
right.
are.
So
Yeah,
then we
we-
could get a final and review it at the next meeting
Yep.
before it gets baked into our
Yep.
financial performance for the year. Yeah.
I just think it's nice to have one document, so when we go back and look at it at some point, someone has a question, it's all together. The insurance, the costs,
Yep.
instead of having to look in 4 different places, not 4, I'm exaggerating, but 2 different
Yeah,
This
places
is the
even.
report we
This
gave
is
you
what-
last
this is what
month.
the storm cost
Everything's
is.
Right,
on
this is
one
what the
report.
storm cost, this was our reimbursement channels. We got 1.5 million back from FEMA, we got 880,000 from insurance, and
Yep.
this is what we expended it on.
And
And then
just
it's
a-
in one document, done.
Here it is.
Completely agree.
Just
One
a quick
document.
way to read that is that, and I don't have my spotlight here, that, so we started out with an original amount that we had pulled together before FEMA started making their cuts. And so that's that first column that says original amounts
Mhm.
of the different costs. And then they started making reductions. That because some of these employees were budgeted, they cut them. So they cut 431,000 because we would have had to pay for that time anyway. that it wasn't overtime, that they don't care that there was an opportunity cost that we couldn't do road work because we were cleaning up trees, but they don't care. That we had put in there for the volunteer time, and they give a dollar amount for volunteer time, and we used that. But then they said, no, because your firefighters make a stipend of $1,500 a year, we're going to take that $1,500 a year, divide it by 2,080 hours, and we'll give you 78 cents an hour for them instead of the $40 or whatever the original amount was. So that was a haircut that they took off. Mutual aid, I have to say that I guessed that number because that's why it's in orange. That because we never got it all pulled together because we would have had to have the 78 or so 72
Fire
different
companies show us
departments.
every single fireman, when they were here,
Right.
what work they did, by hour, by minute, and these other companies just wanted to help us. It would take them a couple hundred hours for somebody to sit down and put that all together if they had the data, so we just didn't get that. If more fire companies go on to Crisis Track, which we've gone on to, then their firemen on their phones. Here I am, this is the address I went, quick note, this is what I did, fire, helping, motor vehicle accident, etc. And if another disaster comes up, we hopefully, if they do that, we could use Crisis Track. Also, we are changing our policies because if we do this in our written policies, that if we ever have another disaster, all employees will go on an hourly basis. Then we can make claim against FEMA for any hours over their normal 35 or 40 hours a week. And we will also put into policy, we don't know if they'll accept it, that our volunteer firemen, if they go in a disaster, we pick a number. We're going to pay them $20 an hour, right? If it's payable by FEMA.
So-
Then the not 100% reimbursable, Kevin told me what that was, but I forgot. So Kevin, if you're watching, could you text me and remind me what that was? That, but it has to do with salaries.
So on the bottom of this sheet, though, in green, which is hard to read, it says we got $1 million back from insurance.
991.
991,297. That's different than the 880 we're talking about. That's what I'm saying. I like to see these things just tie back. Because we've talked 880, this is 991 here on this sheet. So
But
did we get 991
we
back?
got
in this sheet?
991, and last month you had the sheet that shows everything that was reimbursed that that came back. But I can give you that. But the reason that it's in green down there is because the rest of this was coming from the FEMA reports. I was tying it right out to their reports, and they didn't care about $500,000 of it. That they only had 400 on their FEMA reports, but the total we got was.
And then you reduced on this line, just so I'm following, you reduced $2 million worth of current FEMA amount expenses by only $424,000 on this line. Then the next line on your insurance reduction, and you only reduced it by $13,000 on the upper line.
So each one of these is FEMA has a report. So the category A, debris removal, they have a report. And so we were tying that column, current FEMA amount. That's the amount that we gave them that was approved by them. And then in their report, they said insurance reductions.
So they took it off
So
because
they
we
took
got
it off.
because we got reimbursed by insurance for that line item or partial line item.
Correct. And so they took off, on each of these 6 or so different categories, they took off 424, but there was still more that we got reimbursed for from FEMA that they just don't, from insurance that FEMA just didn't care about and put on their report at all.
Okay.
So then we take out the insurance reimbursement, we get to the net cost, and then we divide it between the town share and the federal share.
Okay. Thank you.
An updated final copy would still be worth it.
That's fine.
Please, thank you.
That's fine.
So just, I know we know this, but I need a reminder. The direct costs, fiscal year 18 and 19, were recognized as expenses in those years? Or are they?
Correct. That,
Okay.
so in 18, we recognized 698, and we picked up a receivable of
Yep,
698.
and then we collected, or we're gonna collect that, right?
And we hope to collect that within a month or so.
Right.
And in 19, we had 677 of expenses, so we picked up revenue for 677. And we think that we're going to, and we booked it as a receivable at June 30th of 19, and we don't want to book a receivable for what seems to be a gain, or a profit, and so the rest we were leaving until year 2020 for anything else and that we think our best guess now is it's going to be about 128,000 that'll go to revenue for this year.
Okay. So, from a revenue upside standpoint, we between FEMA, ECS, and interest, we're up over $800,000 revenue to the good.
Correct.
Yes. That's
We should get a
correct.
summary of that, though, in December. We should see the shortfall revenue and because we threw over, and we're gonna get refinance money
Uh-huh.
as well. You didn't throw in there. I know it was 175 over to life, but it's still money
Yep.
we're gonna achieve. We should have a scorecard at the 6 months
Yeah,
saying,
when we do the
we're
operating budget,
800,000.
We will put those in there.
So last year.
No, but right, we should know in December what we're ahead right now on the revenue side. Because we've got, like Dan said, $300,000 of revenue we expect to get above budget.
800.
300 on the investment, 200,
Right.
200 on the ECS, 500. It's adding up to a number. But then there was a shortfall on the prior year taxes, right, of a couple $100,000 projected. So we need to know the
Yeah.
highs and the lows, not the ones that are within a few percentage points, but the
Changes.
ones.
So-
The big changes.
Big
Last
changes.
year.
Right, and the net thing, are we up 500,000 net that we're planning on being at the end of the year? And then we can decide, like that 128 from FEMA, you said we didn't pay for wear and tear on the vehicles. Is that going to a capital type of fund that we're funding ahead for capital money?
So the last year I gave you a few times a projection of here's what we budgeted and here's the big
Mhm.
outliers, and so I'll update that for next meeting.
Yeah.
Yeah, because there's big numbers moving.
Yeah. there's big
Knowing
numbers,
that
there's
that's
big
not where
numbers.
the end of
Big
the
numbers
year
right
is,
there, too.
it's an interim view.
Yeah, it's
Yeah,
not
no, I know.
to be held, but it's nice to know
course.
the scorecard.
Yeah, because if
Right.
we're ticking up revenue and then we have a cushion that can if we don't pay attention to it, it can start to be frittered away with special appropriation here and cost over
Right.
on there. That we don't want that to happen.
And it'd
Right.
also be nice to know for the budgeting process, it starts January.
Right.
Correct.
Anything else on this?
Any other questions for me?
On FEMA specific first? Anybody? Anything else for our finance director?
Thank you.
Thank you.
Thanks, Marcia. This time, I'll invite Colette Sturm, Chair of the Board of Education, up to the table to go through the October 2019 financial report memo and the financials.
Hi. Hey, thanks,
Hello.
Sean. Just to review on the financials first, the Finance Committee of the Board of Ed meets the second Monday of every month. We review the financials then, and then I send them to the board chair for you all, who distributes them, and usually that works well. Because there are some issues that are brought up in this financial report, I just wanted to make you aware that the Board of Ed has not officially discussed these financials yet. We do that on the third meeting, or the third Wednesday of every month. So while I'm going to explain what's going on here, or just answer any questions people may have, I'm not going to be able to give you specific answers that the board has discussed and acted on yet, because while we did make sure that they saw these financials, they haven't been discussed yet.
Thanks.
So, financials look a little bit different than last month. Over this period of time, we have documented 6 new outplaced students. I can't go into really specifics about it, because with that amount, you're talking about student identification. I can review the amount of ways that students are outplaced, which I don't know, Brianna, if you want some review of that, but generally, students are outplaced if they move into the district with a IEP that demonstrates an outplacement that we need to legally honor at that point, whether they're identified in district and they are identified as needing an outplacement service, or whether the parents unilaterally outplace them, in which case if the board needs to demonstrate that, or the district needs to demonstrate that they're best served in service. If that doesn't work, there is a settlement and a mediation. And so then they can be outplaced through either the unilateral placement or the settlement through the mediation. So those are the ways that that can happen.
How many total students are outplaced now?
Before this, there were 31.
Before, okay.
Yes.
Thank you.
So now we have 37.
Wow.
So that brought us with a shortfall of approximately 400,000. Some of that is going to be identified with this freeze. We instituted a hard spending freeze as of yesterday morning because due to our finance committee meeting on Monday afternoon. Then we're also identifying and exploring other possible ways to address the other 200,000. In addition to that, though, something that we needed to look at, and we wanted to make sure the Board of Finance knew as well, going down the line, we do have another additional 7 students that are currently undergoing evaluation. Worst case scenario, then, there would be 7 other outplaced students. It's hard to predict how many of those would lead to outplacement. So that does...
What's the average outplacement cost per student? About
It depends. It
100,000?
goes anywhere from, including tuition and transportation, it can go anywhere from 60,000 to 130,000, depending on the student's needs.
Does the change of who's at the top of the special ed department have
None.
anything to do with kind of the direction that that's going?
No, no. The determination of where the outplaced students go is directly related to the student's needs. It could be anything from requiring, some learning difficulties to being on the spectrum to psychological needs. And all of those directly determine how much the outplacement costs.
I know a couple of years ago when this type of thing happened again, there was a discussion about hitting a threshold number of students with a special need, with a specific need. At the time, I think it was more social emotional that students were being outplaced for. Have we hit that threshold yet to start working on bringing some of those services
We have been
in-house?
working since our discussion last time to bring those services in-house.
What is the general time frame for getting a program established that will meet the needs? I mean, I'm sure that the needs are diverse.
It's being addressed already at the high school, and it's
Okay.
being worked at the high school and trickled down to the middle school. There are some students that are definitely just not appropriate to use what we can provide in-house.
Do you generally find that the parents are receptive to having the kids stay in-house versus having to outplace them, or is it really just whatever the program provides? is what
Exactly. It's
best
depending on the
meets
student's
your
needs. 100%.
Talking about costs, you renegotiated fuel oil at Town Hall. Does that have the potential to impact Board of Ed
Actually,
fuel
yeah,
oil buy?
About 8,000 of it is, I think, Board of Ed.
Out of
I have
that
to look at it.
13?
We do have the split. The
Okay.
13 is total between the schools, and we did together.
I feel like we're in this situation year after year with often the same type of thing. I know that we've discussed also a couple of years ago was discussed about how we were approaching what the state average was. We were probably identifying students earlier, and we were kind of around the state average. Is that average
14%.
moving up now, or?
The average statewide is generally creeping up as well.
Okay.
And you'll find if you look at all the districts, we are not the only district in this situation at all.
Yeah.
But we're at a 14% identification rate. The state average is 14.1%.
I also think when we look at this, on the town side, if we knew something like this was going to happen, maybe we put a contingency in the budget. But the minute you put in the Board of Ed's budget, if they don't need it, then you're hitting MBR, and you can't take it away the next year. So that's a concern for us, too.
Yeah. We keep reaching a point, it seems earlier and earlier in the school year, where
Yeah.
there are budget freezes, and we need to provide the services that these students need, but at the same time, I don't want us to be taking away from the needs of the schools, of the staff, of the students that aren't using those services. And
I agree.
we keep having these budget freezes, and I don't know how many years we've put off textbooks or equipment or furniture or whatever, and we're kicking the can down the road, and nobody wants to spend more money. But I think, as we get more clarity on what's going on with this and what the Board of Ed, but I don't want it to be, I know that there needs to be a budget freeze to reevaluate, but I don't want to see that lead to a cut in services for, the other 83% of students or 86% of
Yes.
students in
Robbing
the
Peter.
district.
Right.
Based
But-
on the numbers you're giving us, we're looking at a 45% increase of special ed students this year.
Outplaced.
Outplaced.
Not total special
Right.
education students.
Right,
That's-
okay.
that's,
So, yeah, but that's still, that's 45% increase from what we budgeted, and we know that that's a really high expense, and you're talking
With
an
another 7
average
in
of
play.
almost $100,000 per student. That's
But
a huge
This,
impact.
sorry, Ricky, but
No, go
this all
ahead.
ties back to the capital plan and meeting these numbers that we say we meet. I keep harping about sticking to that model, but when you creep up now and you're gonna add maybe $800,000 to their operating budget, the school that we just approved, the police department, all these things, the new library, we gotta be cautious of spending all this money, and I keep harping, everybody was like, Glenn, blah, 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 but I'm saying these are the things that if we don't stick to our guns where we can stick to our guns, you can't manage this. If we go beyond our needs on the model on a regular budget basis, we pulled it back last year, right, to meet the model, and we have these costs that we have to pay. I mean, obviously, that's why, that model is so important
Yeah.
to stick. It's just like, when are we gonna do the school? When is the school? What, you talk about capital, where does that fit in the 10-year plan? Do we have all the approvals? Is the wetlands approval done? Is all of these things in place where we know we're gonna be able to build this school in 4 years, or is it gonna be 5 years, or whatever? Or do we have the timeline for the new school? And I know I'm going to capital and that, but it ties into how do we pay for this extra money?
The timeline for the school is set.
So we got all the approvals, with wetlands
but
and
the
everything to
timeline
move
is
forward.
set.
So what is the timeline for the school?
3 years, 2020.
Fall of 2022.
So we'll be able to meet that on that property, 2022.
Yeah, we can build it, we've got the approval for it, that has nothing to do with special ed. The problem
No, it
we
has
have
nothing to
here-
do with special ed, it has to do with budgeting process and the money that we gotta
Here's the
spend.
problem. Our model did not anticipate bringing in so many new special ed students.
I
It
agree.
just didn't.
Steve, I'm on board with you.
Yeah.
I'm not
Right.
arguing with you. I'm saying there's a point where the money runs out.
Yep.
And the money we put forth in that model was pushing our taxpayers to 1 year, 8% increase just on the model alone. Now we start, whatever the highest was number in the model, now we're starting to add in $400,000 of special ed costs, which the Board of Ed can't be held accountable for. I can't hold the Board of Ed accountable for $400,000 worth of special ed outplacements, right? So if they have 7 more, that's $800,000. That puts them over the model number by 3% next year, just coming out of the gate.
That's true.
Right, which is, goes back
Now
to
we're
why, right?
compounding
Sure.
all of our payments, our tax increases. That's why when we start talking about capital projects, we have to lay in the operating costs.
And I think
Which is-
that's where we need to start, when we start realizing the revenue from the new buildings in Four Corners and Branson, all that kind of stuff. I mean, that will help.
Oh, it'll help a lot. It'll
But
help
we
a
haven't
lot.
really seen a lot of that yet, and hopefully it will help offset.
Yeah, for
Correct.
example, Brookfield Village hasn't given us a penny, they give us $45,000 a year, and they won't give us more money until next year because we had an agreement that was signed 7 years ago, that said they get no increase for the first 3 years after they build.
Well, let's be
So they'll start paying next year.
be careful. That money's already accounted for in the model by
Yeah, I know
on
it
other
is.
assumptions. So it's not like we can't spend that money twice. It's already
No,
accounted for
this
other
is-
I agree with
purposes.
you.
Right.
So, but what's not accounted for is an additional $500,000 in interest income, for instance, which
I
might
agree.
be permanent. That's why I want to understand which one of these increased revenue components might also be permanent
reliable.
to perhaps offset the permanent increase
Agreed.
in the. in
Not,
the-
not disagreeing, but that's part of
Agreed.
the whole process of
Yep.
this model, is getting it
Yep.
right.
I think models often are adjusted
Absolutely.
as realities come through. So I think,
We'll get back to it. We can even look at it as early as next month or in January when there's actually
Right.
6 months
Mhm.
gone and we have hard numbers for 6 months and your assumptions and whatnot. We can build that in January to a meeting, of course.
And just as a reminder, I
Do the
think-
model right on the screen and we'll poke
Just
through it.
saying,
Absolutely
then
right.
it hold to the numbers where we
Of course.
can hold to the numbers,
We can.
because
I
these
think
are gonna
everybody
come
agrees
up.
to that.
All right, I have a
Okay.
couple questions on the sheet if you don't mind.
Sure.
Uh,
Is that true?
Medicaid reimbursement, difficulty in obtaining parental consent. Why is there a difficulty in that process?
I wish I could give the answers. What happens is when we had estimated initially $100,000 in Medicaid reimbursement.
Right, which is an
Medicaid
estimate. I get
recognition.
that, yeah.
That was with the consultant that we use, the service that we actually use that does it.
Mm-hmm.
We have to obtain that consent from every single parent because we don't know which ones qualify for Medicaid. So we get the consent from every single one. It goes over to the company. They bill those parents whose children qualify for Medicaid.
Right.
We don't know that. In order to do that, we have to get every single parent to sign a consent. And even if we tell them, and generally we find a lot of the times those that are new to the district don't have a problem. It's a new paper. Even if we say it doesn't matter whether you do or don't qualify for Medicaid, we don't want to know. This is not anything other than giving this company permission to bill. We have parents who are reluctant and suspicious to do it.
Do you let them know that it costs about $100,000 per student, and that any little bit will help?
The education of the parents isn't the problem, it's just their willingness to follow through and participate.
It has not been for lack of trying, and we are actually, it is clearly defined how much we can approach them and tell them by law, and we do what we can to the extent that we can. And we try to approach it other ways and try to do rationale. We're doing the best we can to get that money.
Okay.
And this is just a relatively new asking for reimbursement in the last few years.
Within a couple of years. So as we have different parents that come in, we hopefully will expect that number to rise. Yes.
It's
So-
part of the process.
Then last month, you identified two things that you're monitoring closely. You identified outplacement tuition, which is the 404, and long-term substitutes, which is not on this current sheet. And you had a burn rate of about 50,000 last month. So you're not going to last your $300,000 if you're going to burn 50,000 a month coming out of the gates the first month.
Long-term subs are a little bit difficult to predict at times because they often, the rationale, the reason you have long-term subs are teachers that
Right.
are out for different things.
Right, but I said 50, you burned 42,
Yeah.
679 this month. It's the first real month of school, right? So
It's
300,000
possible.
is not going to stand up, I don't think, in the process.
It's possible. It's possible.
Okay.
It's too early to predict at this point, but yes, it does necessitate monitoring.
I think last year we missed it by what, 303,000? Is that the number? I have last year's thing here too. Last year, substitutes was a $303,000 overrun from budget.
Sounds about right.
Yeah, but their salaries were down. They were pretty offset.
No, I'm just saying the line item now. I'm not
Yeah.
talking the offsets, I'm talking the line item. So
Generally, when you
it
have-
trends in a direction of we're gonna overspend that budget. The trend
Just
shows.
went in the opposite direction.
They're
It's
directly
possible.
correlated.
Okay. And then on the offsets, I have one quick question too. Transportation, there's an offset of 21,000 and it was a 1% prepayment discount. Have we been missing that or is that a new thing? Because if we know there's a 1% premium discount, prepayment discount, why aren't we looking at that when we're doing the budget process? If transportation is billed at $1 million or whatever the number is, why aren't we looking at the 1% discount as part of the budget process? Of, if we pay this big bill 1% or pay prepayment, we save the 1%, we should reduce that line item by the 1% and maybe utilize that money somewhere else.
I'll check into it.
Because that to me is like a known. Like if there's a prepayment percentage off, that's a known.
Yeah, but if we have $1 million bill for transportation, and we have to pay it all up front 12 months ahead of time,
Right.
I'd rather pay them monthly.
But they did it.
and
It's
earn
listed
the
here as a
interest.
savings, is what I'm trying to say.
1%
So
interest?
it's located here as a I agree with what you're saying, it should be looked at, but this is an
You can
identified
earn more
savings.
in the bank than paying it.
Then maybe that's a discussion. Did we already prepay this? Or is this just a thing we're talking about doing?
We did already prepay
Yes.
that.
So
and-
then that discussion, see, now you lead me to say, why didn't we have that discussion as well before we prepaid something?
So,
You opened up another door where you're saying,
I was not aware that there was a 1% discount in transportation. Sorry.
so
but this is what I'm saying, we should be talking about these things, because you're right. If there's a better savings to
This
to
is
not
what
prepay.
The Board of Ed should be discussing that.
So
We
the-
give them a set amount of money, and it's their budget that they're working.
so
We
the-
supplement the budget. We went through this earlier, right? So this is,
We give them a specific amount every year.
right. But it just seems to me that this is a known. If we're doing these kind of moves, we should all be involved.
So,
Point taken, but, I mean, I don't think we're telling the Board of Ed how they're moving their dollars around. We give them their money, and if they're gonna take advantage of the prepayment discount, I hope you would. You know?
So the finance offices, both finance offices are talking about this because we just, working together, we didn't get rid of, but we inactivated 8,000 vendors. And so we have 2,000 vendors left.
Right.
And we are talking about, because Munis will calculate the percent discount. And right now, that we did it on this one, we do it on some of on our side to get a discount by paying on time, which we
Right.
pay. And what we've been talking about is, where does that go? Do we show that discount as revenue? Do we get the
Right.
departments that pay it? But the finance offices, even though it hasn't come here, have been talking about that.
Right, but now, like I say, what we talked about too, it's like getting a payday loan to pay off. When you're so far in the hole to get a payday loan, you're not getting out of the hole. So is this a payday loan move, or is this a calculated move to save this money? This is what I'm trying to say. When we're talking, we sit here at the budget time, we're talking about $5,000 risers. We're cutting things out of the budget that we sort of need. $21,000 can cover some of this. So are we making educated prepayments, or are we just trying to, because we got a shortfall, not by the Board of Ed's doing, are we trying to get a payday loan to offset
Point
the
taken.
cost?
Yeah, point taken. I think this stuff should be looked into, obviously. The capability of Munis and payment terms and whatnot, yeah. And I think that,
And in budget development.
yeah, let us know, Marcia, what the decision is on how you take, or how those discounts are to be taken. And we'll keep that in mind for the budget. Any other questions, comments, concerns on the Board of Education?
I have a newbie question.
Mhm.
I'm sorry.
No.
The Medicaid reimbursement, just how does that paperwork go out? Is it with the new school packet? Is it every year? How does it work? I'm just out of curiosity.
Well, it only goes for the special education students, because that is where we get the Medicaid reimbursement from, or qualified services for that, physical therapy, outpatient therapy, those related services. So it is a packet, and then when it's discussed, probably at a PPT, a planning placement team meeting with special education.
Okay. And is there any other way to get it out other than a packet via
It's
email?
discussed. It's
Okay.
discussed in person, actually.
Gotcha. So
Yes.
there's still resistance regardless. Understood. Thank you.
Yes, everyone's exploring ways to try to increase the rate of people approving that and signing it.
Understood completely. Thank you.
Mhm.
Hey, Marcia, is there any other items, expense items, where discounts, or potential discounts could be taken? Things like oil, like heating oil, things like that, where we can identify, like pretty much have a running list of, here are some areas where discounts are acceptable or common, and here's ones where we plan on taking them or we don't, and maybe have just kind of a running list, because maybe during budget season that's useful to kind of run down that list and say, hey, where are we taking advantage of these, and does it make sense to
I
or
haven't
not?
seen a lot of vendors who offer like a 210 net 30, right?
Have you
But
asked?
we
I
can
mean,
look-
especially for like heating oil. I mean, some of those guys, you pay them up front.
We
so-
have a contract for heating oil.
Yeah.
It's
So-
just a contract.
Things like O&G, that they do take the discount, that's a construction thing that on the trucks looks like D&G, but we do take the discount. And the tricky part on our end is Public Works takes a discount, and they include the discounted price in their budget. So if we were going to try to quantify this and throw it into a revenue, we have to tell them that raise their budget. So I know that they have one, Staples has one, but that's exactly
wouldn't-
what we're talking about.
Wouldn't it look better for budget purposes when you're trying to sell the budget to say, here's what we have as our expenses, but here are some discounts that we're taking, and at least you can highlight those areas. I mean, you know,
Correct, and that's why we
the
wanna-
offset is nice, but sometimes to actually see it, how it plays out, maybe it plays better to the mind that, oh, okay, they're actually doing some due diligence here and taking this discount.
And that's why we want to show it in Munis, that right now, so like the O&G one was today, that it might be a $10,000 bill, but what, and the discount makes it, 9,900, that what's been done in the past is the 9,900 goes into Munis, so there is no calculation of the discount, that the net is already being put in, and that's what we're talking about, is do we put the 10,000 in, and even if we don't show it as revenue, then we at least can give you the answer that, and right now we can't give you the answer that,
But my point is, by showing it by revenue, at least you're giving the public the peace of mind that there's no nothing, kind of no reserve being baked into the budget. Not accusing anybody of doing that, but at least it'll give the peace of mind.
yeah, whether
going
it's by
forward.
revenue, that it
Right.
would be nice to,
Or
if
even
it's a
just a
separate
list
report.
of, hey, by the way,
Right.
in these items, these are items where discounts are taken, and this is the discounts. It's baked into the budget, whether they can see it directly in there or not. Just to kind of have that list, or just even present it to the future boards to say, hey, by the way, here's where we're taking advantage of discounts. Here's the net of those discounts, and then that way, the next year we can you guys go back to that list and say, all right, we took these discounts. Are we taking the same ones? Are we adding? Are we reducing? Why?
Yep, and that's exactly what we're talking about, is trying to get that quantified and as part of this vendor cleanup process.
Okay, cool.
I do have another question for you, Colette. And what do you think the timeline is on the additional possible 7 students to be identified or not, and what the cost would be?
By the end of the year.
By the end of this calendar year?
Mhm.
Okay, so we,
Most of them would be by the end of this.
Okay.
Either evaluations are ongoing or planned by the end of the year.
all right, because I agree with Eileen. I'd like to figure out a way to bridge some of that gap with so
Everyone's on the
once
same
we
page.
have a decent number, I think the board should work together to try to bridge that gap together, because that's huge.
Right.
That's a
I
huge
agree.
number.
It is. We shouldn't suffocate
Yeah,
the
absolutely.
schools, but we still can't let it get out of
We
control
gotta
either.
know the numbers, yep.
Right? And
Yep.
still, we got to control the costs on the backside of this
Absolutely.
too. We can't just
Absolutely.
be like, oh, now it's got to be a mutual.
Yep.
Yep,
Yep.
Thing.
there will be firmer numbers, and this will be something that the new board will be discussing next week. And so
Right.
that is why I'm only speaking in
Yeah, understood.
generalities
Right.
right now, because
Understood.
But-
I don't have those decisions
Yep.
to
To
report.
Steve's point, though, once we put this in,
I know, well,
it doesn't come out. So we give them 600,000 this year. No, hear me out.
I
We
know.
give them 600,000, and that means their budget next year is $600,000 ahead starting point. Starting point. You can't come backwards. You can't go backwards.
well, is this a special appropriation, or is this a?
It's still part of their budget. So that
Which
means
must needle.
Yep.
once they have that money,
Yeah.
they're starting $600,000 off. So when they come to us, they can only come to us for $100,000 to
But you
increase their
have to
budget.
assume that at least most of that is going to be used for those students next year.
Right.
But that's another thing we got to
That
look
would-
at.
That would be my point.
So
And the
now you're
tuition that
looking
we
at-
pay now is
Sure.
going to be for next
Yeah.
year's.
10% increase.
Yeah.
Yeah.
Plus.
They know the attrition rate with
We'll have to
which
pay
kids
attention.
roll out.
I'm just saying these
programs.
numbers
Yeah.
stagger. Once every decision we make compounds the next decision down the road.
That's true.
That's all.
Did you have anything else for Colette? Colette, thank you very
Thank
much
you very
for
much.
this.
Thank
Don't
you.
go anywhere. Don't go anywhere. What are you doing? This has been an honor and a privilege to have you at these meetings. Obviously, before you were the chairperson of the board, we weren't doing this kind of thing, and the relationship between the boards has grown significantly. I think everyone could find a way to agree with that. There's a good relationship now, I think, between the boards, so thank you. Awesome job.
Thank you. It's been my pleasure to be here, and I am very grateful for the collaboration and communication, especially as demonstrated just with this conversation here. So it's greatly appreciated.
Thank you.
Thank you very
Colette.
much.
Thank you.
Mr. Audit Committee Chair?
Yep.
You're up.
Short report. Marcia went through the status. I've been in constant communication with Marcia for about 12 hours. We're in good shape. Marcia keeps me informed. when it's time for the audit committee to get involved with the team and get the draft, we will do so. But last year was smooth. This year seems to be going smoother, and I am very curious about where the FEMA ends up. But from my understanding, everything's going quite well, and we'll keep in closer touch as we get closer. So no other report other than that.
Thank you, sir. Any questions or comments for the chair of the audit committee? John? No? Thank you. We have no matters of old business to discuss. First item of new business, we have a police outside service fund request for a total of $25,100. I move to approve the recommendation of the Board of Selectmen to approve the appropriation for $25,100 from the Police Department Outside Service Fund to purchase Police Department wireless network upgrades and 3 patrol tablets to be installed in the police patrol vehicles.
Second?
Is there anything, sir, that you would like to add? I don't see Chief Purcell in attendance to explain this one. It seems pretty
No, there is
straightforward.
more than, we had, as of last week, $135,000.
137 at
plus an accrual-
June 30th.
Plus an accrual for the work they've been doing, not like a
137 to June
Yeah.
30th.
At June
So there's
30th.
plenty of money in the outside services fund, and this is exactly what it was meant for. And we always appreciate the police commission and the police department using that instead of coming to the town and putting in our capital, and they've been very careful and thoughtful, and I would suggest that you approve this.
These are capital items. Sir? Brianna? I mean, any discussion? Okay. Rick?
I'm good.
Dan? Nope. Okay. Hearing no more discussion, I call the motion to a vote. All those in favor indicate by saying aye.
Aye.
Aye. Motion carries 6-0. If you have that, Steve, I can sign off, or I'll sign off on the paper copies. That's up to you. Okay. There was another item of new business listed in anticipation. However, that item will be stricken. Struck. At this time, I move to add to the agenda an executive session to...
Before we do that, can I say one thing? Apologize.
On this request?
No, before you go to the request to go to executive. Are we voting? We voted already. So, yeah, before we go, if they have the numbers for December, I'm going back to the Board of Ed, that's where my mind is going. Can we have a joint meeting with the Board of Ed in January to really sit down and look at these numbers and really understand the monster we got to face for the
Ahead
next
of,
6
ahead of the joint session at the beginning of February?
Yeah, one just strictly for special ed cost overrun. I know we can't get into details of,
Yeah.
or overruns of, because it's a big nut. By then, Marcia will have her numbers on where we stand. Steve can understand what we can do and what we can't do to pass over the money to the Board of Ed,
Sure.
and not have it be distracted with 10 other items of the thing. If we could all get together one day in January with the
Because-
Board of Ed, it's too big a number.
It is, and the normal, I mean, the one you were talking about is to plan for next year.
Yeah.
This is to rectify
Mhm.
this year,
Of
so
course.
it makes
It all
makes
leads
sense.
And it should be
itself.
done before the budget meeting.
Yeah.
So we know what we have and what monsters. So if we could set up that meeting in January, I think it would help us all
You
in the
could do it at
process.
your normal meeting in January.
No, I don't want to be bothered with I don't want to be here for 5 hours discussing something so important. I want to come focused
Sure.
with a mission that we're going to tackle $800,000 possibly of expenditures that we haven't budgeted for.
For the next 20 days, I'll find time to put that request in motion and get it drawn up for the January meeting, sure. Make sure they're
For a
available.
special January meeting. That's what I'm saying. I don't, so we can focus solely on this nut.
We can commit to a meeting now, but that doesn't mean they're going to show up.
I
So, yeah,
appreciate
we'll,
that, but I'm just
of
saying,
course, yeah.
well, if they don't show up, then
Yeah.
I
Yeah.
gotta be honest with you.
No, we'll, I'll put that request out there, of course.
Because it'd help us all.
Of course it would. That's a good idea.
All right, sorry, thank you.
At this time, again, I move that we enter, or we add an executive session to the agenda to discuss pending claims litigation matters.
Second.
Okay, all those in favor of the addition to the agenda, indicate by saying aye.
Aye.
Aye. Motion carries 6-0. At this time, I move to enter into executive session to discuss pending claims, litigation matters, inviting John Lucas and Marcia Marion and Board Secretary Diane.
Pending board member?
No, sir.
Okay.
I second. Did you need a second on that one?
Yeah?
Okay.
All those in favor, indicate by saying aye.
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 Okay. We'll go into executive session in there.
Thank you.
Okay, we're back. At this time, I'll ask everyone if there are any other items to come before the board. I don't know if there are any. Okay. Any members of the voting public still here to give comments? Okay, seeing none. At this time, I'd like to say thank you to Ricky for being a part of this board for the past 2 years. Your contributions have been great, and many, not just reduced to a budget transfer explanation form, but I think a point of view that we can all appreciate on numerous topics. Yeah, you challenged everyone very well, and I think that's really all that's expected of board members, to be as objective as possible and professional and contribute as much as possible in anything. I think you did that, and I think everyone else could agree you did that. So we do have this great thing.
Thank you, guys. I appreciate it.
Wow.
Thank you.
If anyone else would like to say anything, feel free, please.
I'd like to say I appreciate what you brought to the table, Ricky, very much so. You brought a nice calming effect. You brought great points, and when you spoke, I listened. So I really respect your opinions and your decision making. So thank you.
Thank you. Appreciate that. And you guys can text me if you have any questions on past items, because I seem to, some of those things just get stuck in my head.
Thank you, sir.
Thank you. Appreciate it, guys.
Thank you.
All right, so hearing no other orders of business, I move to adjourn.
I'll second. For the last time. All those in favor?
Aye.
All right, we're adjourned. Thank you, everyone.
Thank you.